Hey, hey, thanks for clicking on my video. Hope you're having an awesome day. Today we're going to be talking about Air Canada, the best airline stock you could buy right now. It is selling at a crazy discount, and we're going to talk about what makes it such a great investment. But before that, let's take a look back and let's take a look at the whole industry. Why would you want to invest in an industry that is growing at a CAGR of 4.4%? So it is projected to grow 4.7% over the next 2 decades. That's not a lot of growth at all. And when you're looking for an industry to invest in, the main thing you want to invest into something that doesn't take a lot of capital, somewhere where there's good net margins and gross margins. I asked my friend AI on the pros and cons of investing into the airline industry. So, for the first things first, we can see attractive valuations. Absolutely amazing, attractive valuations, selling for 3 times earnings. What's not to like? Potential for growth, not so much for Air Canada. Their earnings are projected to go down for two main reasons. They're investing a lot into airplanes. We're going to talk about that. And they did, right. The main thing that I already did a video on Air Canada, and the main red flag was the strike. There was a potential strike with the pilots, but they did secure an agreement without a strike going on, a 4-year deal that will generate an extra 2 billion Canadian dollars for the pilots, for the 5,400 pilots they have. Some of the other cons, we can see high operational costs. We can see the volatility, just like COVID happened. When COVID happened, all of these stocks crashed, and we can see what damage they did. They're still recovering from that damage. And Air Canada has done a good job. If you look at what the management has been doing lately, it is above outstanding. We can see that the long-term debt reduction, they got rid of $1.4 billion of debt, 1 billion of net debt, high total liquidity of $10 billion, 8 billion in cash when the market cap is 6 billion itself. They're once again profitable with free cash flow going in. They are focusing on deleveraging. No, they do not pay a dividend. They are paying off debt, which is a smart move. Currently at 1 times leverage ratio, it was zero point 0.8 before COVID, and they're almost there. Now, the thing I want to talk to you guys about is the modern fleet. They're modernizing their fleet. They're projected to get 90 airplanes in the next 5 years, spending $1.3 billion in this year alone, the 6 months left, 3.5 billion in next year, and 2026, $4.7 billion. Now that, and they're paying their pilots extra. That's why their earnings are supposed to go down. Now I understand why they're buying new airplanes. First, of course, is these guys. You don't have to maintain them. You don't have to worry about the planes breaking down. And all of these new planes, they're at least 30% more efficient on fuel. That is the main cost of all airline companies. Fuel is 20 to 30% of their costs, operation costs, and this is going to make it go down. If you look at Air Canada, since the pandemic crash, they have recovered the worst. They're the green label right here. They're down 62% in the last 5 years, and the best performer is Delta Airlines, down 7% still. But now, if you look at insights of Air Canada, they're pretty damn good. We can see return on invested capital 18%. They're good margins. As the management is doing a great job. We can see that they have a 60% gross margin and a 7.9% net margin. If you look at Delta, they have a 49% gross margin and a 7% net margin. And American Airlines, 61% gross margin and negative net margin. They're not even profitable. Look at the future. We can see that the projected earnings per share growth is negative 5%, which is why I believe they're investing in airplanes and now they have to pay people more. They have 40,000 employees. And we can see that the revenue is supposed to go up 10%. And then if you look at this, if you look at the valuations, look at this: 3 times earnings, 3 times free cash flow, 0.26 times sales. Now, if you look at the 5-year average of sales, their 5-year average price to sales is 0.86. And now, don't let that confuse you. What I mean that don't let that confuse you is let's look at the past price to sales. So we're comparing the three biggest airline companies. I don't know if they're the biggest, but they're competitors: Delta Airlines, Air Canada, and American Airlines. So this is what I mean by the average and the median. There's a huge difference. So if you look at Air Canada, the average price to sale is zero point 0.6, but that's because they had this massive spike in 2021. And if you look at the median is 0.38. So they're currently sitting at 0.26 times sales. So they are still undervalued. But if you look at his a while ago, 2016, they're selling at 0.19 times sales, 0.4 times sales. So they're sitting in that range where they usually sit. So now, before I share my thoughts about the company and if you should invest in it, let's go over this. This is on the Moomoo platform. We can see that the target price is $22, which we're going to get into technical analysis as well in a second. But the fair value, they give it a $13 per share fair value by Morningstar. That's very cheap. And then if you look at it here, we can see the bulls and the bears say, and right here we can see that the estimates for the revenue is supposed to go up in Q3 2024 and then go back down to where it is right now. Same for earnings per share and the EBITDA. So the future is not looking too promising for Air Canada or any of the airlines in general. Now, if you look at the technical analysis, they've been in this wedge for a while. And by 2025, I hope they will break out of it and not go back down to $13, but go back up to $20 to $25 range. I believe that is that's where I believe the price will go. And if you are stuck in this stock holding it and you're just around break even, I'm not a financial advisor, but personally, I would most likely sell it and buy into one of my favorite investments in my most favorable industries, such as AI and renewable energy, which I made about a video about the best stocks to own in those industries. And if you're not scared, and if you do like the company, of course, do your own due diligence, because this stock could very much go to $20 to $25 and make a nice return for your money. But yeah, if you are still watching this video, I hope it really helped you out. Turner, this video was for you. I hope you enjoyed it and everybody else listening. So thank you guys very much for your time, and subscribe for the best content out there. Thank you very much, and I'll see you in the next one.